Well, g'day there traders and friends, market enthusiasts right around the world. You're here with James on behalf of Pivot Point Trading as I sit down and bring you this very late Thursday market recap, almost some form of a pre-market discussion as we round out this week's worth of trading. First of all, before I move into the technical picture of the three US markets and some of our individual trade setups, I'd just like to give you an update on where I am in the world. Those of you who are privy to our pro analysis discussions over the weekend know that I am currently on vacation, or somewhat of a vacation, a working vacation, in the country of Thailand. On Tuesday, I flew down to the island of Koh Lanta, and I currently find myself in a beachside resort in a bungalow right on the beach, a private little beach down here in Koh Lanta, Thailand, enjoying myself with my partner and having a very nice time in the process. I mean, I'm here till Monday. I fly out of Koh Lanta and then make my way back to Australia, so there will be more routine market updates as I go through this analysis more so on a daily basis, but this is the best which I've really had or been able to sort of record on while I find myself in this very remote place of this country, or in this country. Very nice, very tropical type of area, very warm. It is raining at the moment outside, or slightly overcast, but the food here and the drinks and sort of our resort setup with the pool overlooking the ocean. We are looking west back towards Phuket, so we get to see the sunset in the afternoons, which is absolutely magical, something which I don't get to see living on the east coast of Australia. We obviously see the sunrise, but the sunset, it's just a really different type of experience, and something which I'll remember for a very long time. So I am enjoying myself over here in Thailand. I am keeping a very close eye on the markets themselves, but at the moment, I mean, it's really been a struggle as the markets just continue to push on higher and higher. I mean, we keep breaking above these resistance areas at the moment. As at the close on Thursday, we can see the Dow Jones Industrial Average up just under 200 points. The S&P 500, if you look in the top right-hand component of my screen, you can see it's up 20 points. And the Nasdaq, once again, has been sort of the leading market, up 73 points as we come back and approach all of this early overhead resistance, which the market really struggled to get above throughout the entirety of 2015. If you have a look at my chart, you can see over here, this is the beginning of 2015, and we're pretty much flat. I mean, we're pretty much closing as at Thursday, where we began the year on January 1st, 2015. The best way to surmise this right now is to bring you the yearly candle. So this is the yearly candle to date. Let me just push my Y stick again. You can see right here, if I just take the annotations off the screen for you, just give me a couple of moments here. You can see that the net movement on the Dow Jones year to date has been 40 points. A very big doji candlestick once again setting up. I mean, we keep flicking back and forth between a net negative year and a net positive year. We have just moved into positive territory. However, the candlestick itself is very, very worrisome. Again, we've got some form of a hangman type of candle setting up on the S&P 500. We are up only 41 points year to date. So again, a very relative or a very flat year as we move into the 11th month of 2015, and the Nasdaq has been once again the exception. It is up 391 points, closer to 400, and we're once again coming back up to the wick, which we set up in the year 2000. So a big resistance area on the Nasdaq again. What I'd like to do, however, is put my annotations back on the screen for you, and let me just work through this on the daily type of candlestick and also the daily type of chart. There's been a lot of overhead resistance, which we've been paying very close attention to throughout the entirety of this Slope of Hope rally. This rally, which we have witnessed since the beginning of October 2015, no one could have predicted. I mean, there's always the opportunity to trade these markets back into, say, the declining 200 and 100 simple moving averages, and then these varying levels of overhead resistance. And also, if I change to the weekly chart, some of these long-term fan lines, which theoretically should act as resistance. Let me just zoom in on the detail and show you this. This is the weekly chart. And not to mention these downward trend lines which we've set up throughout 2015. You can see how X has really marked a spot over in this location. Well, as it stands this week, it looks as though we've broken above it, but we still have to contend with a lot of horizontal resistance. The best way to show you this picture, and again, since the beginning of October 2015, we have been in a very strong market push higher, for all the right or wrong reasons, depending on which side of the fence or which directional bias you have as you look at these markets. But I just wanted to show you the facts based on how overbought we currently are. Have a look at the stochastics. I mean, this is a really great indication of just how overbought and oversold a particular market is. It gives us fantastic buy and sell signals. Now, we've been overbought really since about mid-October 2015, and as it stands, we're finding ourselves still overbought as at the 5th of November 2015. We can only stay elevated at these levels for really around this amount of time until we see a correction back down into a more neutral setting on these overbought oscillators. You can see here again on the relative strength index, we've got some form of a triple top setting up. We've got 1, 2, and 3. What's most worrying is that we've turned down for the third time, and it's going to be a very, very big struggle for this market to push back up into that overbought territory. I mean, we're still overbought, but I mean, it's going to be or take a lot for this market to shrug off just how overbought it is and to continue the bullish move higher without seeing a significant pullback. I know I've been speaking about this for weeks, but when it happens, it's going to happen very fast and very rapidly. You're going to see this market turn very, very quickly, and you do not want to get caught off guard. You can see again the moving average convergence divergence, otherwise known as the MACD. You can see this meteoric rise, which we've just seen again throughout October into the beginning of November, and it looks as though momentum is getting ready to shift. I spoke about this last week, but as it stands, we saw Monday and Tuesday pushing up a little bit higher. Wednesday and Thursday, we're getting much more mixed signals on the individual candlesticks. What is most worrying again, I mean, and this is even more so worrying than the natural overbought, oversold oscillating indicators, is the fact that the ADX has just turned down. I spoke about this over the weekend as well, and what happens is the ADX itself will push up into certain levels or certain areas on the technical indicator or get to a certain price point, and when it gets to this price point, you'll see the ADX more times than not turn down. And what we have seen, you can see all of these times over here where the ADX has hit it and it's turned down. There's been a few instances where we've just pushed above it, which I'm circling in green for you right now. And then we see either a pullback or a bounce based on what the market is doing, if we're in a bullish move or a bearish move. What we're expecting right now with this ADX just turning down is to see the selling pressure flow back into the market. I've had these bearish trades set up, 17,478. And let me ask you the question, has this trigger been triggered yet by price? And the answer to that question at the moment is no, it hasn't. So I'm still not in a bearish position on the Dow Jones Industrial Average or on the DIA. Let me just write this here for you, DIA. I'm still waiting for this position to enter into it because I know just how overbought this market is and how it's naturally going to correct back down to a lower level at a very near point in the future, maybe even beginning on Friday as we look at this market. Outside of that, again, the S&P 500 is a mirror image of that of the Dow Jones. We're pushing up on higher. We're coming back to these old resistance levels dating back really through to August 2015 before we saw the support level crack and the market capitulate back down to this 1,900 area. It looks as though we're seeing algorithms and traders push this market back up into resistance, and when we get there, it seems as though everyone is going to jump out of the trade. It's almost like a predefined destination or a predefined target where we're honing in on it, we're going to probably hit it, but when we get to this location, it feels as though the majority are going to wipe their hands clean, liquidate their positions, and just see what happens next with the overall market. The S&P 500 again on the weekly was up 20 points, not the biggest move, but just looking at these candlesticks away from Monday and Tuesday's relatively bullish session. I mean, really the biggest session to begin the week was Monday. We saw a little pop to the upside, but since then we've got two spinning tops and then another doji on Thursday. So again, indecision. And the indecision is some form of an overbought factor. If I change the oscillating indicators again, you can just see the Stokes. You see the RSI once again about to crack that signal line right around that 70 area. And the MACD is getting very, very close to triggering a sell signal. At the moment, if you are jumping into bullish trades, it is very, very, very risky. Personally, I am not doing it. I've got a lot of individual trades set up for the next momentum move lower, and I'll just show this to you or illustrate it with my drawing chart. It's going to look something like this. So you want to capture the move on the market when it makes the tipping point turn. You don't want to be trying to catch a market and to be buying into just an incredibly overbought state, thinking that the market is going to continue going up, 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 up indefinitely. You have to be realistic. You have to keep your expectations in check. And if I change the monthly candle of these markets, we have seen a very big reversal throughout the month of October. You can see this engulfing type of candlestick pattern setting up on the S&P 500. But once again, we're pushing back into this multi-month resistance level. Let me show you this. We've got 1, 2, 3, 4, 5, 6, 7 months we read our head into this resistance level. It would be very unrealistic to expect this market to get back up into this level and just break above it and continue its bullish move. You have to be open to the fact that this market needs a correction. It will see a correction. What we'll do is we'll analyze the correction when it happens, and we'll just see how deep it actually corrects. and whether or not this is going to set up a higher low, which will probably set up another continuation to the upside, or whether or not we're going to see a really big breakdown below the long-term 100 and 200 simple moving averages and break below this 1,987 trigger on the S&P 500. I will speak about this in Pro and bring a lot of these triggers up a lot higher because we're just that overbought on the market. But right now, it's really not the time to really be positioning yourself for expecting this market to continue. In other words, be complacent, expecting the bull market to just continue. This is really an anomaly type of rally, or at least a monthly rally, which really is quite rare. I think it is on one of the few occasions since the year 2003 that we have seen a monthly rally this big. It really puts September, October last year to shame in many aspects as well. I mean, percentage-wise, I think we did break above that. And that was a really big move. But look what happened after we got the big rally. We at least consolidated sideways. We set up structure, and then we saw the break opportunity and the continuation of the bullish argument and the bullish trend continued to the upside. Now, again, at the moment, there's a lot of speculation as to whether this is a legitimate exhaustion gap. Very interesting to see this gap on the right-hand shoulder of the head and shoulders, and also this multi-month resistance area. It's showing up right in the perfect location. And the candlesticks, once again, I mean, we don't have any shooting stars. We don't have any bearish engulfings or one black crow type of candlesticks. All we're seeing is just this lack of commitment for a couple of days, and then all of a sudden we see like another short squeeze and we get a one-day pop to the upside, and then we move sideways. Have a look at this. We've got 3 sideways spinning tops. We get that one push up or that one pop to the upside. We get another spinning top, a little pullback, and then we get another pop. And look what's happened for the past 3 days. We see these spinning stars and the market move stagnant right up at these all-time highs on the NASDAQ. So I mean, it's really hard, or it has been very hard, to not jump into this bullish move because we are disciplined and we are waiting for the right opportunity to short it. But at the same time, it still hasn't happened. So, I mean, it has been a fairly inactive month, definitely an inactive week, although some trades have triggered, which is what I'm going to speak to you about right now. Apple hasn't triggered. It's pushed back up into this red box and it's starting to turn. I will bring you an update and also updated trade analysis on that Apple trade. Since I've been checking my email here in Colanter, I've had a lot of people email me about Amazon. A lot of people got in at 622 and they have been rewarded, maybe for some of the wrong reasons, but if you are setting up bidirectional trading plans, it has rewarded you exceptionally well. At the moment, it's up at 655. So, I mean, it's up over $30 since our entry. We had a stop here at 614. If you are in the Amazon trade, I'd pretty much want to leg out of this if it breaks below 642, or if not, get out of it. Very close to where we're currently trading at as at the close on Thursday. We'll bring you an update on Amazon as well. Have a look at Boeing Airlines moving completely sideways. What you want to pay attention to is some form of a Bollinger Band squeeze. I'll speak about that over the weekend. And as it looks right now, we're flirting with this downward trend line. I know we've spent 2 weeks above it. And again, that was largely due to its earnings report. We saw this little brief break above it. I'm very much excited to see whether Boeing Airlines can hold these levels, and if we do, we'll get a mad dash probably back up to 156. So I am going to start changing a lot of these dotted lines into default, real trade setup, so to speak. And Boeing Airlines has definitely got a very nice bidirectional trade at the moment. However, the market once again is just extremely overbought, really an extreme which I haven't seen for a number of years. And because of that, I know ultimately we are going to see a move like this, which is going to impact a lot of these individual trades which haven't already had the bullish pop. So speaking about Boeing Airlines, if it hasn't had the bullish pop yet and the market is very close to giving us a turn, which is ultimately coming, you could expect something like this down to 134, 127 or 118. I will bring you that update in more detail when we get there. Baidu again is broken above that downward trend line, or so it appears at the moment. Again, we had a big earnings gap 2 weeks ago. At the moment, though, we are playing with danger because you see this downward trend line, a lot of overhead resistance, and it's very rare not to see a pullback right around this 200 simple moving average. If I can show you this as well, pay attention to volume. Volume is absolutely getting sucked dry out of Baidu. There's not many people actually buying into this most recent push on up higher. And when I change to the overbought setting of Baidu, you can just see the Stokes and the RSI at extremes. I mean, here we are at 82 on the RSI and 91 on the stochastics as well. So, I mean, you have to keep, again, your expectations relative. You have to say, look, well, how much further can we go until we see that pullback? And right now, it's very, very risky jumping into these trades. ADX, again, has broken above its relative highs. So, I mean, if you look at this on a perspective on ADX, let me show you this as an example. You can see that we're up here about 70, and you can say, well, how many times since the year 2011, so this is going back to February 2011, has Baidu been this overbought or oversold during a trend or during a counter trend move? And you can see there's been one occasion, 2, 3, 4. This is the 5th occasion since the year 2011, really since the start of 2011, where we have been at this extreme on the ADX. What happens? We get a very quick reversal. You see these reversals in the ADX, that means the trend is over and we're moving either into a correction, a reversal, or some form of a sideways consolidation. So pay attention to that on Baidu. Caterpillar hasn't triggered either direction. However, I am liking the structure. Very excited about this. CVX, you saw my reluctance on this trade given that we were running into that downward trend line. So I spoke about this in great detail. And I said of the two, it's definitely the bearish preference. This took me off guard somewhat to a degree. I mean, I wasn't really excited whatsoever about the bullish move. And again, I made that very clear. And I really had to push this trigger all the way up at 97.74, but understanding that we had this downward trend line. And again, the week that I just spoke about has been very bearish in terms of the pro analysis update over the weekend on that Saturday. It just looks like, I mean, it's perfectly expected given that we are moving into this downward trend line. So pay attention to CVX. It looks as though we are getting a reversal, and it looks as though we have set up some form of a false Bollinger Band break as well. So pay attention to that. Google again is breaking above 755. Looks like a bullish continuation, but just pay attention to the market. We have a little bit of a shooting star on Thursday. Not a textbook shooting star, but definitely a very nice signal to say, hey, we might move sideways if we do not continue its meteoric rise or its parabolic move to the upside. Goldman Sachs is relatively flat, pushing into this red box. Very nice trade setup for this week. IBM is coming back to flirt around these all-time lows. Not all-time lows, but definitely multi-year lows. This has been one of my favorite bearish trades. It is still on the table. A very exciting trade if, in fact, we crack below that magical number, right around 135. I'm not sure what happened to my target or my trigger, but it is below these two little candlesticks, and I will bring you an update on IBM. Exceptionally weak, and it's even been weak in the face of a rising market. So when this market does turn, expect IBM to just flood or to absolutely capitulate below those lows which we set up last month or at the beginning of this month. Netflix, again, I'm not too excited about at the moment. I should say I'm more so excited about the bearish setup. Sorry, I'll just rephrase that. We're pushing back up into this resistance area. We have a high wave spinning top right at that perfect location. Let me drag this box over to the right. You can see again how we push up into the red box and we fail. We push up into the red box. What happens next? I expect Netflix to turn, reverse, and move to the downside. I will bring you an update on that trade tomorrow, so pay attention to that. Tesla has reported its earnings, has seen a gap up. We had this 224.74 trade trigger, but only after earnings was announced, most likely the following day. So I mean, if you're in this, congratulations. If you had a contingent order set up during earnings, good for you. Personally, I don't, because earnings is very volatile. It's hard to sort of quantify what's going to happen pre-announcement. So I'm not in Tesla at the moment. I'm monitoring the chart, but again, I'll bring you an update on this particular stock. We have a very good opportunity to fade the gap if in fact the market rolls, and also a continuational type of trigger as well. So I'd be sitting out of Tesla on Friday if you're not already in it. And the final trade once again is Walgreens Boots and Alliance. Here we were on Monday, speaking about this candle here, and it was all about this trade trigger here, 81.24, right? We squeaked up this bullish entry, hoping that it would be too far away to actually get triggered, right? All the way up here, just above $88, $88.31. I spoke about the risk and reward and how it was a very lackluster trade and how the benefit of the doubt was still to the downside. So although we got a 2-day pop on Monday and Tuesday, you can see we got that somewhat of a hangman type of candle, more so an inside day candle, 2-day reversal type of pattern between Tuesday and Wednesday. And then on Thursday, we've got this long day sort of bearish Morobozu candlestick. So it looks as though it's weak. It's going to struggle right around this location between support and resistance. And I'd be very surprised if people, given my outlook on the market last week and my bias based on individual trade setups to the downside, that you would have had to have or been forced or compelled to actually enter in at 88.31. It was more so, hey, we'll put the trigger all the way up here, and it's very rare or very unlikely that it will trigger. Having said that, though, the markets once again are just waiting for a rollover. If you think this is normal or this is going to continue indefinitely, you need to reevaluate your outlook and more so get in tune with the market itself. This has been very much so an artificially induced rally higher. It's great. It's been somewhat engineered. But at the moment, I mean, I'm just simply waiting. Here I am in Koh Lanta, Thailand, on some form of vacation or working holiday, and I haven't been all that busy in terms of individual trade setups and also management of my trades. It's really been, I guess, a blessing given what the market is doing and how you can see since, what was the date here, the 23rd of October, where we've pretty much just moved sideways. Here we are on the 5th. So about 12 days later, a couple of trading sessions. How many have we got? We got 10 trading sessions later. So 2 full weeks. Still waiting for the right bearish opportunity in reference to those DIA puts, also the Qs or the SPY, depending on which you want to trade. Now, I understand this has been a longer Thursday market recap, but just talking about the markets right now, it's been quite hard given the type of activity which we are seeing. So I wanted to be, I guess, as comprehensive as possible given this, Thursday, very late Thursday evening market recap, almost a pre-market discussion on Friday morning. One final thing which I'll speak about is gold. Or a couple of things also. Gold has absolutely capitulated. It looked as though it was breaking above this red box. You saw that very nice engulfing type of candlestick. This was dating back to Wednesday last week. And once we broke the low of that candle, that was the trade right there. I know I don't speak about gold all too much, but in terms of a bull market and people, speaking about the bullish breakout in gold, you have to wait for gold to break above the 200, and you need to see the 100 above the 200 and price above both. So, I mean, we're still in a perfect bearish continuational pattern. That's just me speaking without really a directional bias, just very neutrally saying, look, there will be a fantastic time to jump into gold or looking for a long-term entry into the price of gold. At the moment, though, we're in a defined bear trend, in a bear market. And this is the type of market, at least, that the equity markets themselves are moving into. So, I mean, if you look at the Dow Jones Industrial Average, let me ask you the question, where's the 100 and where's the 200? So the 100 is below the 200. This is the 100 here. This is the 200 on my screen. Price is above both. So we're sort of seeing like a sort of a funky price action setting. If price capitulates and gets below the 100 and the 200, then we're very, very much bearish on the equity markets. That's why my trigger at the moment is still down here at 17,478. That will change. Again, on the S&P, 100 below the 200. However, price is in or at least above them temporarily. So we are in this sort of recovery phase, so to speak, in terms of technical analysis. And you can see right now, even on the NASDAQ, we've just changed, or actually we haven't changed bullish yet. The 100 is actually below the 200 and price is above both. So we're in that recovery phase as well. I'll show you the update on silver. Silver is below the 100. It's also below the 200. We ran up into the 200 simple moving average 3 times, and now we failed. We've got some form of a little triple top. I don't like to call it that because triple top should set up over about 1 to 3 months, or I should say 2 to 3 months, not just 1 month. So, I mean, you can just say it's a little multi-top high, and we've broken the neckline and we're failing to the downside. So I wouldn't be jumping into long trades on silver or gold. I just acknowledge that, look, we're probably going to come back down to about 1385 on the ETF for silver, and we'll probably come back down to about 105 on the GLD ETF for gold. One final thing, again, let me just bring up the Dow Jones Transportation Average. You can see right here, I've been speaking about this market for quite some time. We are ping-ponging back and forth between support and also this very strong downward trend line. If I zoom out and show you this, you can see this defined trend line since the month of February and March 2015 when it started to get moving. You can see this resistance area in April and this sell-off to the downside over here. Right now, we are moving back and forth. It looks as though we may break it to the upside. At the same time, we can very easily break it to the downside. So, I mean, very neutral setup on the Dow Jones Transportation Average. This is the trade right here, at least some form of a momentum type of trade. But my bias is still to the downside. If I change to the long-term simple moving averages again, you can see we're below the 200. We're just above the 100. But the most important part of this chart is that we have that bearish cross, the 100 below the 200 there. So it's looking very, very bearish as well. Pay attention to this. If this market breaks 7,967, a really great trade down to 77.35 on the NASDAQ. A final market I want to speak about is the US dollar, because the US dollar, again, people are calling for the end of the dollar. It's the end of the world. The US dollar is going to crash. That hasn't been my stance whatsoever. If we are, moving into a deflationary type of period, globally speaking, the US dollar is going to continue to appreciate in value. So as the US dollar moves up or as it continues to gain value or appreciate in value, commodities like gold, silver, also gas, it's no surprise or any exception that gas is trading all around that 45 handle, and if that 40 area cracks on the chart, we may see gas in the 30s, which would be very, very rare, and it has been a very long time since we have seen the price of gas this low. But again, you have to pay attention to the strength of the US dollar. At the moment, it looks as though we're breaking this resistance area, about $97.10. If we break this or clear this little swing high over here, we're going to have a very quick rally back up to 100 on the US dollar index. So it means it's counter pairs, or say like the euro is going to depreciate in value, lose purchasing power, the Australian dollar, the Canadian dollar as well. I mean, lots of these currency pairs, or at least the opposite side of the transaction or the opposite currency which it trades against, is going to depreciate as the US dollar continues its bull market. At the moment, you can see we're bouncing off the 100 and the 200. This is a good signal. We are above both. And if we zoom out to the long-term chart, you can see that since July 2014, it's just been a continuation. We've moved into some form of a sideways consolidation, so we're just eking out buyers and sellers moving sideways. And then ultimately, if this 100 area breaks, this is what I'm paying very close attention to. If this area breaks over here, let me change to the monthly chart, and this will round out this week's video, or this update at least. You can see this downward trend, which I've got over here. A parallel line on the downside, it works absolutely brilliantly. You see this over here? And you see this downward trend line over here. Our target, as I've been speaking about for months, is going to come up here about 113. That says to us that we've got about 13% higher potentially for the US dollar to move or gain in value until we start eking our head back on up into the top of this market, or at least the top in terms of the dollar's purchasing power. If in fact we get up into this level, I will be looking at this market very closely, but it is very much so a trading opportunity, more so on a primary trend level. If in fact we can break above this level right here, about 164, expect some volatility, but if we clear that, we're going up to 113 as I just went through with you, as I just illustrated on the chart for you. So pay attention to that chart as well. At the moment though, traders and friends, I am signing off. It's actually a Friday morning here in Koh Lanta, Thailand. So I am signing out. I'll get this video up online and you will see this most likely pre-market Friday, if not a precursor or a pre-video into the pro analysis video this weekend. The internet is pretty good where I am. I'm a little bit surprised. The Wi-Fi is great in this little bungalow which I find myself in on the beach. It's absolutely amazing. I'll post some photos up on the website for you as well under the pro, in the pro area, just so you can see where I am. And I look forward to bringing you the analysis on Saturday. However, this week or up until Thursday, it has been quite a slow week. And speaking from personal experience, I'm just waiting. I'm patiently waiting for the right opportunity to enter into this market. I'm not buying into the complacency. I'm not buying into the mania, which we have seen sort of continue on for the past 10 trading sessions, as I just spoke about just before. 10 trading sessions just to see this market eke up and make a couple of intra-week and intraday higher highs. When this turns, it's going to be severe, significant, and we'll just monitor the correction when it happens. We'll see how deep it is and how fast it moves. And I'll bring you that information when it does. But at the moment, as at the close on Thursday, you see the picture just like me. It's been a very slow moving, a slow grinding market higher. And you just need to sort of learn to live with it, learn to take opportunity, or the right opportunity when the market presents itself. The opportunity which I'm speaking about is when the market turns and when it breaks below this level. Again, this will get changed depending on Friday's candlestick, because we're getting very close to the entry on these markets. All right, so I'll finish that for this YouTube update. Have a fantastic evening, have a fantastic weekend, no matter where you are located around the world. If you're not in pro, I'd encourage you to have a look at that pro analysis class. There are a lot of trades still forming from last week, which haven't actually triggered. And it has been somewhat of a surprise. I mean, last week, very, very bearish, a lot of individual trades. Some have actually broken out to the upside, but again, it's really hard to take those trades in the face of this overbought market and just how overextended it is, knowing that we are going to roll. So, I mean, there's a lot of opportunity to the downside on a lot of these individual trades. Have a fantastic evening. Have a great Friday. Have a great weekend. I'll bring you that pro analysis recording first thing Saturday morning. And I look forward to getting through the majority of emails. I will do that later this evening. All right, it's about 10 a.m. here in on the island of Koh Lanta. So I'm going to go have a look at some of the attractions around the island right now. And when I get back this afternoon, maybe after dinner, or most certainly after dinner, I will respond to the bulk of the emails which have accumulated over the past 24 to maybe 40 hours if I haven't responded to everyone at this particular moment in time. So have a great Friday, great weekend, and I'll see you soon, or you hear my voice very soon. All the best, traders. Goodbye.